Welcome, Pat, and welcome everybody to the Rick Helps Real Estate Show. Today, if we get over 100 likes, I'll go get a haircut.
There you go. Welcome, everybody. Millions of our viewers. Got my
Millions.
my Gatorade Price Mortgage shirt on.
That's right. You're ready to rock and roll. So interesting week. Nothing's open. We had Columbus Day shut down Monday, banking and all that stuff. And then the government's closed. And the only thing that's moving rates is the speeches that the Fed chairman and Fed governors are having. So we'll talk a little bit about that today. But then there was an article that came out on Zillow about Zillow that said Zillow says it would take an unrealistic mortgage rate decline to restore housing affordability. The average 30-year fixed mortgage rate would need to be 4.43 to make the median priced U.S. home affordable for the median priced households. And they go into a little more detail and stuff, but basically talking about this includes it would take a 0% mortgage rate to make the median home price more affordable for households earning the local income. This includes New York, Los Angeles, Miami, San Francisco, San Diego, and San Jose. So even if rates got down to zero, you're toast. And then they kind of have a little bit of a map and an outlook like here, but it's interesting where they're saying, to get to the median home price versus the median income. But, that's true. The median income it's a stretch, but, the workaround that's been here for years is it's primarily not one income that's buying a house. It's, two people combined incomes. I mean, that's kind of what you're seeing on the lending side, isn't it?
Yeah, pretty much. I mean, I'd say two incomes, depends, husband or wife, wife, sometimes obviously makes more money than the husband, just depends. I mean, combined, maybe one person makes 65 to 70, the other one makes, 65 to 70, 80, and if they got, relative, they're smart. Biggest thing I've seen is just really what cuts people down is usually one or two expensive car payments.
Yeah.
That's, the $1,000 car payment or some, so that's really, it seems to me like the last couple of years, what I've been running into is like, oh my God, you got a car payment. It's $1,100. It's like, if you can knock that down to $400 or $500, that's a $600 a month difference, so
yeah.
It's dramatic.
Well, Chairman Powell came out and said this. He admits that mortgage buying, MBS buying, mortgage-backed securities should have stopped sooner, and says Fed will be more nimble in future cycles. I don't think he's going to be around for future cycles.
No.
He said they may have kept purchasing mortgage-backed securities for too long, but he's also unsure how much it actually contributed to the pandemic housing boom. Seriously? They got the rates down to like zero. He's buying back MBS. They should have pulled back on that about mid-2021, but they were convinced that, that they needed to keep everything going out there to keep the economy rocking and rolling, along with Janet Yellen saying, print, let's go, borrow as much money as you can. The rates are cheap. And I don't know, but they don't, he said this because he was speaking in front of the National Association for Business Economics meeting. And they're quite interested in housing, but, the central bank isn't all about housing, but it was going nuts. They should have pulled back, in my opinion. It was,
yeah, I mean, they're buying. I remember, that chart that I was following, the New York Federal Reserve, the Federal Reserve, the MBS buying, they're buying what, $100 billion a month, 120 billion. Then they basically, when rates went up, they just put you could see when they halted that, how rates went up.
Yeah.
And he said recently, they're going to, in terms of tightening, they're going to lose, they're going to not tighten as much going forward, which means they're going to be, not rolling off the MBS, because they just been letting the MBS, mortgage-backed securities markets, when they come mature, they just let them roll off their sheet.
Well, one of the things Zillow said in that commentary.
I am crackling on our thing, by the way.
Oh man, hold on just a second.
Just FYI. Very late.
That happens.
I know. Why does it come? It seems like it pops in like every other StreamYard we do, or something once in a while, every month.
Yeah, yeah. And it pretty much ruins it. Is it still popping now?
Not yet.
Okay.
I'll raise my hand when it does.
Okay, I closed a bunch of tabs, and sometimes that's what does it. So looking out here, our active listings, as you can see, are they're climbing seasonally. There's nothing alarming going. In fact, we're only up 20 more listings this week than we were last week, especially in looking at the ticker down below, and it's showing us here on my 7-day moving average that the number of new listings, while they did climb a little bit, are not climbing that much, but we still can't seem to get over the 2,700 number of contracts on a weekly basis. So it's more of the same. And along with the active listings, I'm looking at the listing success rate, and last year it was 73%. This year it's 69. 2022 was 68. The other interesting number, and this is the one that I thought we could chatter about a little bit here. This is the sale price to list price ratio, showing 97.54%. And I pulled up a listing. I don't have it in front of me now because I closed a bunch of tabs, and I'm encouraged we don't have any popping, right? So
yeah, we still do, unfortunately. It just a little, it's not popping, it's just like weird.
Yeah. Sorry, folks. You live by the tech and you die by the tech. But so this number shows that the final list price before the contract was written. So let me explain what I saw. I pulled up a listing. They listed it for $699,000. It sold for $595,000. Now that should make the list to price ratio a huge gap, right?
Yeah.
But they started at $699, then went down to $630, and then they accepted an offer at $595. So the list to price ratio is comparing only those two numbers, $630 to $595. It's not comparing the $595 to the original asking price of $699. So this is where people look and they go, oh my gosh, my neighbor, he had to lower his price by $80,000 to get it sold. And I go, well, yeah, it came in too hot.
Yeah.
So they didn't get any interest till they got down to $630, and then the buyers came in and still wrote them an offer lower than that. But it's too bad that we don't have a price ratio for sellers to see the original list price to the contract price ratio, because it wouldn't be 97.54. It'd probably be 80 or 70.
It's really, if you think about it, I mean, quite frankly, not saying anything dramatic here, but it's really case by case basis then, house by house.
Yeah.
I mean, that's digging into the history of how long, that's where a good real estate agent will come into play, right?
Well, you've got to take a real deep dive. I mean, I had you send me a canary report on that house, and it wasn't even close to what their numbers showed. So you can look at the online reports, you can look at what your neighbors did, but you've really got to spend a lot of time on this before you list the house and the price. But I think the most important thing is to make sure that you and your agents agree on a strategy, not so much the set price.
Yeah.
And you're shooting yourself in your foot and go, well, let's try that price. Well, if you already statistically know that that's a stretch, don't do it.
Yeah.
Pull back now. And especially now as you're getting close to the holidays, because if you don't get any action in October, forget it for November. It's going to be much slower in December. So I think what you have to do is have a strategy. Okay, after 1 week, if we don't have any showings, what do you want to do? What about after 2 weeks, 3 weeks? And so that it's a natural conversation, not that dreaded phone call by the agent that goes, I think we need to go down $40K.
Yeah.
Nobody wants to hear that. And the contract ratio says a lot too. And I'm going to kind of blow this up a lot. It's showing that we're in what's statistically a cold market. We have a contract ratio of 30.2. We've moved beyond balance. Now, not every city, but overall in our market, we are considered a cold market. And here's the Crawford Market Index here shows we started to improve August, September. Now we're kind of coming down, and that's because inventory's climbing up. So,
well, I mean, so bottom line is a cold market does boil into a buyer's market, right?
yeah, well, it's worse than it's definitely a buyer's market, man, especially when you look at Maricopa and you look at Buckeye. Those, I think Maricopa on a CMI is down like 45, 49. So if you want to get a zip code report, I got the QR code up here and a link below. And look, above Pat's head, there, other hand.
Huh?
Other hand. There you go.
That's coming up on my hand, but I mean,
that's Pat's QR code right there. So you can get that. We are just QR coding the living daylights out of you. So tell me what's going on with rates. I mean, we had some movement because Chairman Powell spoke, but we're not getting any economic data, no jobs number, no CPI. What is anything moving?
Yeah, I mean, today we saw the mortgage-backed 5% coupon was up 16 basis points. I mean, it's right now.
Let me stop you there for the audience. What's a 5% coupon?
Well, there's different tranches of coupons. Like here, okay, see, there's a 5.5%. It's basically a mortgage-backed 5% coupon. I mean, different tranches. There's a 6% coupon, 5.5% coupon. I use this. There's like I said, here's the 5.5%. It's just different tranches that mortgage-backed security market will buy. And which as rates go down, what tranche is getting heavier, buying activity.
Gotcha.
So they kind of just zoom in on that. They move, because when the rates were higher, I was looking at we were looking at the 6% coupon back in May, but now rates have gone down. So basically we're kind of moving into the 5% coupon. If I can move this, this thing won't change on me. Why it won't change? Oh, there we go. No, I mean, right now we got the Federal Reserve, meeting October 28th, 29th. So it's about 2 weeks away. But the bond market, the mortgage rates have quickly approaching, the lows that we've seen here recently. We've quietly come back. If you look at it right here, we got the 10-year treasuries at 3.95. So the mortgage-backed security market, there's a lot of dynamics that go into trading. You could spend probably 3 weeks trying to explain it, but
yeah.
we got the 10-year treasury at 3.95. This is back. Let's see here, September 17th. We saw it break 4, and everybody was excited. We're quietly sitting at 3.95 on the 10-year treasury now. The mortgage-backed security market hasn't probably caught up to it yet, because a lot of times the lenders won't be willing, with the volatility and certainly the uncertainty of the government data, they're probably not excited to get the pricing, to give back the pricing that they should be giving, the spreads. So, there's so many dynamics that go into this mortgage-backed security, the treasury market now. Like you said, I just try to keep it simple. I get confused by it some days, because you read it. I mean, it's unbelievable. But, the Federal Reserve's meeting in a couple of weeks. I mean, the market's pricing in right now, obviously a cut of at least 25 basis points. I think they're pricing in it's almost like 100% guarantee that they're going to cut a quarter point. So that'll bring that range, that treasury range, like 3.75 to 4. And so, I mean, the thing that I'm questioning in my mind, and I brought this up to you this morning, with the government being still shut down, I believe, my feeling is, this is just my opinion, I have not heard anybody talk about this on the news networks, but I believe when we open up, we're going to see a slew of data that's going to be, that has not been, that they've been waiting on. And there's going to be just an avalanche of information that comes out that is going to certainly, what's going to happen to rates when, that government releases that data.
Yeah, it's going to be like drinking out of a fire hose.
Yeah, it's all this pent up data that they're going to release. So I think, it kind of dawned on me. I think we're going to see some interesting movements in the rates. And quite frankly, the rate that they always say the trend is your friend. And the trend has been downward in rates, since May. So
Well, it could be interesting. You could see it's going to come out just boom, 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 and you're going to go, "Oh, terrible jobs numbers. Oh, wait, the CPI is good. Oh, wait,
yeah,
there's a revision." And so even the stock market's going to go down, up, down, and so the bond market's going to react that way. I agree with you 100%. Once this shutdown is done and the numbers come out, it's not like they're going to say jobs reports coming out Tuesday. They're just going to spit this stuff out. So, folks, we've been late. Here it is.
Yeah, so I know I haven't heard anybody talk about it. Maybe I missed the newscast that they said this, but I think when they do release this, it's going to be kind of interesting. I think it could be interesting. Like you said, the 10-year Treasury slid below 4% very quietly at 3.95. We have been hearing a lot of hoopla because obviously everything is closed. But there was some concern today about the smaller banks. I guess they got hit with some stuff. There was some news out there. But, in terms of rates, throw my screen up there. We've got, the lender that I use Provident. My typical scenario is purchase price 475, 5% down, 780 credit score. But, we were a couple weeks, after the feds came out last month, we were sitting at 6 3/8. Now we've quietly slid back into about the 6 1/8 range with this, one lender. So you're quietly low sixes, now back to high fives, with a little cost. So they've been trending back downward. And I know if I was a betting man, obviously with the job news that we've had the last couple months, we have another negative jobs report. I think it could slide rates. This is just my opinion that we could see rates slide a little bit lower. For people refinancing, I think they are going to come down a little lower. So that's kind of what I've been waiting for. But there has been a lot of damage in terms of rates. So things are looking on a positive standpoint, on my end, fairly.
Well, last week I predicted that pending listings were going to come down, and it was a real stretch because why they came down last year. And look, we're right there matching last year's number. Again, this is just a freaky chart to me.
It is so creepy.
It's like, how does this happen? Week after week, the entire year, with the only anomaly being this week here. Maybe there was a holiday or something in there at that point. That was coming out of Memorial Day, but everything else just identical. So I'm going out on a limb. Pending listings, it's going to increase next week. We're going to go there.
That's crazy. Well, it's creepy how identical those are, the last two. But quite frankly, if you think about it, this last year and a half since those two charts came prevalent, we've had kind of the same market like that.
Yeah, 24 and 25 identical. So we're going to have a breakout one way or another coming here. But here's the chart. It hasn't updated today. It'll update tomorrow. But this is last week's. But again, it shows you that Maricopa and Buckeye way down there, 50.3 and 47.2. They have added the Santan Valley separately from Cook Creek, which is nice because I do get a lot of inquiries about that. And I just have had to shrug my shoulder and go, I can't get it for you.
But so that's a buyer's market down. Those are buyer's markets.
Yeah, anything below Peoria here, actually, even including Tempe, to be honest with you. Tempe's considered somewhat balanced at 90, tomato. But, you've got Chandler's still doing good for sellers at 126, Gilbert, Avondale, obviously Fountain Hills, very seasonal, Paradise Valley. As long as the stock market's going well, those markets are going to perform well. Fountain Hills and Paradise Valley. Scottsdale has quite the mix, but it's still 134.6. So being Paradise Valley, it'll be up one week, down the other week because it's such a small sampling size. So, you can have one house sell or two more listings come on and it changes the CMI because it's a measurement of supply and demand. So there's that. And we don't even have anything to look to next week that goes, well, Pat, what do you think is going to happen next week? Because I think we're still going to be shut down. I don't see any progress on that whatsoever.
Yeah.
I did read an article that they are going to close the CFPB, Consumer Financial. What's it called? Consumer
Consumer
Financial.
Financial Protection Board.
Yeah, which has been a thorn in our side in the real estate end for a long time.
Oh,
And now that
me.
oh yeah, and they're gonna so we're pretty happy about that. I mean, I'm sure they accomplished a couple things, but it's the way they went about it in our industry that, we're not going to miss them. And they've been talking about trying to close them down here for quite some time, even since Trump's first term. And now that all this government shutdowns here and the funding's not there, they go, well, let's just turn off the faucet. So it's gonna.
I think the lending, just my 2 cents worth, the lending institutions since 2008, 2009. I think obviously there's crap going on in the business, but it just seems like ever since they've been around, they just have implemented rules and regulations that just are just totally nonsense. And just, I mean, these financial institutions are getting to the point now where we self-regulate to a certain degree. Where if I get a loan, obviously fraudulent, occupancy fraud is a big thing. I never want my license taken away. It's just there's not worth it. But hopefully,
Yeah, with obviously there's that big case coming on from somebody. Well, there's that one prosecutor in New York, and then the Fed
James,
and then the Fed governor, where they said that it was their primary resident when it wasn't. I mean, the lender's going to be in trouble too, right?
I wouldn't want to be that mortgage broker. I can tell you that right now, because and
they don't talk about that.
I posted that on Facebook. A couple of weeks when it first came out, I said I wouldn't want to be the Letitia James mortgage guy right now, because that is a big. That's a big no. I mean, there's no round, nothing about it. I mean, when people are moving from a principal residence, a bigger home, like say a 5,000 square foot house to a 2,000 square foot house, you have to have letters of explanation, because a lot of people say, well, I'm downsizing. It's obvious to the underwriter I'm downsizing, but it's still, you have to explain your situation. And
especially when you're buying one in another city.
Yeah. I mean, they just pound the living crap out of us. It's like, why they move in? Do you have, can they work there? It's real simple. And the check marks, she cannot get away from, not to be political, but I'm just saying, I don't care who it is. If I'm doing a loan for Joe Smith, I got to make sure my I's are dotted and T's are crossed. I give you an example. I think I've mentioned this before, but back when I was working with another mortgage company, I think I mentioned this, but like I did this loan, this is several years back, but I got a call from our compliance department about 4 months later saying, hey, the auditors were in and they noticed that you didn't sign a date page 3 of the application. And I said, page 3 of the application, I did not date it. And I had to actually go back and date it. That's how detailed they'll look at an audit. So tell me,
and I know now I got kind of hammered by a gentleman once talking about artificial intelligence. And he said, if I find out my agent's using AI, I'm going to want him to refund his commission. And I kind of pushed back and said, well, why? And now there's a good example, Pat, that before you submitted that form, you could take that, put that into ChatGPT or Grok or whatever, and the AI program will understand the requirements, and they'll scan the docs and they'll go, you forgot to initial page 3.
Yeah.
I mean, and that's the kind of stuff it'll catch. And then it's still human review, but AI will flag it, and you're going to go, oh, good. Well, I'm glad they caught that before you send it off.
Yeah.
And before you even send anything off to the underwriters, you can have artificial intelligence. I think we're less than a year for having that happen.
I feel like I'm working off of for you. Some days I feel like I'm working off of artificial intelligence.
Well, it's better than me. I feel half-witted sometimes. Yeah. So, but No, I look forward to some of the things that it can help us to actually give us more crossing the T's and dotting of the I's.
Yeah. Yeah.
You know, it's there's so many cool things that it does, but there's also some, like I send you a zip code report. You know, people when they click on the QR code up there and they ask for that, I still have to go through and double check it. So I have one come through this week on a certain area, and I know the numbers because we go over them here every week. And so I looked at that, and it said that um, I think the listing success rate or the months of supply, no, not months, like days on market, 50 days. I thought, that's not right. And I knew the city. And then it said average appreciation, 4%. I go, no way, no way. And and I know that my AI program was sourcing where I asked them to source. So I went back into Cromford and I pulled up and I compared apples to apples, and I had to go in and change the numbers. They weren't up 5, they were down 3. It wasn't 50 days on market, it was 89 days on market. So AI is not there yet. That's what we call hallucinations. It pulls the data, spits it out. And, you know, so imagine people trying to use that for their homework or college or whatever. You know, just because you got it, artificial intelligence sent it to you, doesn't mean it's right yet.
Yeah. Yeah.
You're going to have to know your stuff. You're going to have to be able to look at what came back to you. And what I like about it is it formats it for me. Because you can imagine me sending you the reports, and I've sent the reports out to you guys in the team. And, you know, imagine how long it would take me to type that out.
Yeah.
And format it in the form that we get. It's really cool information, but I still have to check the math. And so it saves me time in formatting, but I have to take the time to go, I'm about to send Pat this number. Is that the right number? And sometimes they come back and it's blatantly obvious, like, oh, 50 days? I wish.
Yeah.
So it's interesting stuff. And I just think it's going to get better. Now, ChatGPT is now integrating with apps. So you can say, the example I saw that said, build a music playlist in Spotify, and Spotify will come up and you select it and it knows you, and it already shares your login information for your Spotify account. And the guy said, make a music playlist that's similar to Blink 182. And it just goes, done. And he goes over to his Spotify account and there's his new playlist. Done for him.
Yeah.
And you know, I thought, okay, I'm gonna have to kind of play around with that a little bit.
Yeah, you like playing around with stuff.
I had MRI. I won't get into the details, but I took what they said in medical speak, which is like, you know, hard to understand. And I uploaded it and copied and pasted it and said, simplify this. And it just laid it out in like 2 to 3 pages. Here's what this means. Here's what they said. And boom, boom, boom. And it was like, okay, now I don't have to have a medical degree to read this thing.
Yeah. Good point.
So it's helpful. We'll get there. But I think for you, getting back to, you know, you forgot to initial page 3, I think artificial intelligence is really going to help button up those kinds of mistakes. Yeah. Those loans will be sent back to you.
Yeah. My point, you know, is just, you know, how detailed an application, you know, they dial in. So if she checked off primary residence for 2 primary residences, you get a primary residence to live in it a year and then go out and buy another primary residence after 12 months. But if it was within 12 months, that's a big no-no, you know, so anyway.
Yeah, just don't lie. I was a district.
Yeah, lying is just not. I found out lying is just not healthy for anybody, especially, you know, when I'm dealing. You know me. I talk straight, talk to the point. Lying just, you know, I just don't feel good about lying about when I'm trying to deal with somebody's biggest transaction that they ever worked with. You know, be straight with people. People appreciate being straightforward, and if you messed up, say own up to it. Be accountable.
Yeah, I had a front level supervisor come up to me, and I was his district sales manager in Southern California. He's this Italian guy. He goes, can you put together a document that says I make $65,000 a year? I go, why would I do that? He goes, well, I'm trying to qualify for a loan. I said, how often will you visit me in jail?
Yeah.
And he goes, "No, you'll be fine." I said, "I'm not doing that, and I'm insulted that you would ask me."
Yeah.
Get out of my office.
Good for you. Yep.
So I go, "Oh yeah, let me do that. I'll get right on that." I'd have been laid off and fired in a week. So, well, Pat, hope to see you here next week. We'll
Yep.
do to get rid of the scratches and everything. In the meantime, everybody, I got a link down below where you can click on that and get our newsletter that comes out every Monday morning at 7 a.m. Pat's got his mortgage opinion. I share with you the Cromford data. There's also a bunch of other links in there for different reports, and it's very mobile friendly. So don't forget to sign up for that. And we will see you here next week.
All righty. See you guys.
See you, Pat.